Hello, very good morning to all, and I hope that you guys have a great and wonderful and as well as restful weekend. Good morning to all. Welcome to today's Daily Dose of Market Insights. I'm Kelvin here, and welcome to a brand new week as well. Today will be Monday, the 24th of March, 2025. So before we kickstart today's Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so as usual, before we jump straight into today's short-term intraday technical outlook on the broad-based cross-asset classes, ranging from the major US dollar pair, the major US stock indices, as well as the two key commodities that we cover on the daily basis, i.e. Gold XAU/USD and West Texas crude oil, let's have a quick recap what has taken shape on last Friday in terms of the performance of the broad-based cross-asset classes, as well as any relevant news flow that has been released on the weekend, Friday, and as well as today's early Asia session. Let's start with last Friday performance of the major US stock indices. So on last Friday, what we could see is that the major US stock indices initially it actually have a rather lackluster opening. It actually opened on a weaker note, but throughout the end of the last hour of the US session, it managed to actually shape a recovery and close higher to end the day on a positive footing. For three of the major US stock indices, the S&P managed to close almost unchanged at 0.08%, but whereas the Nasdaq 100 outperformed with a gain of 0.39%, and the Dow Jones also almost unchanged at 0.08%, whilst the Russell 2000 managed to actually buck against the trend and have a negative Friday close at negative 0.56%. And the reason why we see a last minute rally or last hour rally on last Friday, pardon me, on the major US stock indices was due to the rather fluid Trump style of engaging market participants in terms of his trade tariffs policy. So we know that on the 2nd of April, Trump keeps saying it will be a liberation day for US. Why 2nd of April is important? Because 2nd April, the US White House will announce this global reciprocal tariffs against countries that have trade surplus with US. But till now, we do not know what is the exact amount of reciprocal tariffs and as well as the product that will be actually taxed on foreign goods heading into US. And on Trump, on last Friday, he hinted there will be flexibility. That means once market heard this word flexibility, it means that there will be room for negotiation as April 2nd of April kicks in, which is 1 week from now. All right, so because of this, market embrace this kind of risk-on scenario on the global US stock indices over here. It actually rallied over here. But however, if we look at the dollar instead starts to actually show strength against the risk so-called appetite proxy currency like the Aussie and the Aussie dollar. That means the dollar starts to strengthening against the high beta currency like the Aussie, and also starts to actually rally against the euro and the sterling as well. Okay, so what we could see over here is that there's this kind of rather insynchronized movement in the broad-based cross-asset classes in line with this ongoing erratic style of implementation of US trade tariffs, especially the next one will be the reciprocal tariffs against the rest of the world. That means this tariff is slightly different. That means what this reciprocal tariffs mean is that they are targeting countries that has significant trade surplus against the US. That means, i.e., it doesn't really affect China or only China, but other Asia country as well. All right. So in terms of this, until 2nd of April, there is no clear kind of signal that the US White House is giving out in terms of the magnitude of the trade tariffs. How does it differ across different countries, and how does it differ across different product ranges as well? And because of this, we start to see incoherent movement across the broad-based cross asset classes. So because of this flexibility that's being hindered by Trump, risk on in the US stock indices on last Friday, but however, no risk on that's being seen on the FX market, where the dollar strengthening against the growth sensitive currency, which is the Aussie dollar. All right, and also today's morning news flow, we do have a slew of PMI data released from Asia Pacific region, especially on Japan. So at 8:30 a.m. Singapore time, there was a preliminary PMI data release. So in fact, today is PMI day. Later I'll share with you what are the other PMI to take note of. So in today early Asia session at 8:30 a.m., Japan releases its preliminary manufacturing PMI for the month of March, which was actually lackluster as well. It went down to below 48.3, still in a contractionary mode, and also below consensus of 49.2. And what surprised over here is the services PMI, which was much weaker than which was very weak. Because initially it was at 53.7. So if you look at the trend of the services PMI, okay, it has been trending upwards steadily since the low of October last year. Okay, and the preliminary March figure surprisingly showed a plunge, and this plunge actually went way back down below the 50 level mark, okay, at 49.8. All right, so at 49.8, it was actually the lowest number since October, and the steepest drops in 9 months. So if you look at the trend, right, there's a sudden plunge down over here. So this sudden plunge down in this preliminary services PMI PMI data for Japan for the month of March, it represents kind of a lackluster services activity in the US, which in Japan, pardon me, in Japan, likely related to the way called uncertainty regarding Trump tariffs that could be also impacted on the Japan economy, because the Japan do have a trade surplus with the US. So that also kind of spoke consumer sentiment in Japan, which is being translated to a rather weak services activity, as being represented by this latest preliminary PMI services PMI data print for the month of March. So because of this, that actually also causes the dollar yen to actually spike up in today's Asia session as well, as it trade towards the 150 resistance level. And bear in mind over here is that in the last few months, BOJ has already started to signal continuation of its gradual interest rate hike, as it's normalized its previous decade of ultra loose monetary policy. And given this rather weak services PMI print that we see this morning, that could actually hold back potentially BOJ gradual interest rate hike approach or guidance. So that actually causes the dollar yen to spike up in today's Asia session. So later I'll highlight what are the key levels to watch on the dollar yen for today. Okay, and with that, that actually kind of sum up the first segment of today's daily dose or market insights. So let us now move on to the second segment, which I will to cover the intraday technical outlook on the broad-based cross asset classes, starting with the FX market first. So as usual, let me expand my screen so that you guys have a clearer view on the charts. So let's start with the euro dollar. So if you recall, euro dollar last week we flipped to a bearish stand. Why? Because of the daily time frame chart, it started to flash a bearish divergence. Okay, where on Thursday we flipped to a bearish stance for this bearish divergence, and where it reacted off the previous medium term ascending trend line support, now turns into a key medium term pullback resistance over here. So there's this inflection level at this 1.0970 bearish divergence. So potentially what we could see now at least is a kind of a mean reversion decline to retrace that previous steep up move that was taken shape in the euro dollar from 3rd of March low all the way up to the high of 19th of March. So on a intraday basis, on the hourly chart, the euro dollar has already hit our first support level that we highlighted on last Friday, 1.0805. And with that, we now will have a tighten key short-term pivotal support for today at 1.0870. Sorry, pardon me, tighten pivotal resistance for today. I repeat again, on last Friday, it hit our first support level at 1.0805. So for today, I will have a tighten key short-term pivotal resistance at 1.0870, and this 1.0870 also coincide with the former minor swing low of 20th of March and last Friday US session high as well. And if we do the Fibo retracement of this ongoing minor slide from the high of 18th of March over here, all the way down to last Friday minor swing low, it confluence with the closely with the 50% Fibo retracement as well. Right, so as long as today's European session bounce didn't surpass above 1.0870, tighten short-term pivotal resistance, we will still maintain the intraday bearish bias on the euro dollar for today below 1.0805, exposes the next near-term support level will be at the minor swing low area of 7th of March. Okay, which will be at this 1.0765. Let me put it in writing. Okay, 1.0765. All right, below 1.7 below 0, pardon me, below 1.0765 may expose a further dip towards the 20-day moving average and the 200-day moving average, all confluencing at the next graphical resist support level at 1.0730, which is the former minor congestion area of 6th of November and 11th of November. Only a hourly close and a push up above 1.0870 will negate today's intraday bearish bias to see a retest of 1.0910 and even 1.0940 slash 1.0970 next, which is the medium term pivotal resistance zone. All right, so i.e. using a tighten key short-term pivotal resistance for today at 1.0870 on the euro dollar to maintain our intraday bearish bias stance. Next up will be the sterling dollar. So the sterling dollar also a slide down lower as expected and almost hit our first support level at 1.2870 at this point in time. So what we could do over here is that we will also tighten our key short-term pivotal resistance on the sterling dollar for today at 1.2980 and maintain the intraday bearish bias. First support, no change to watch out for will be at 1.2865. A breakdown below 1.2865 exposes 1.2810, which is the 200-day moving average, acting as the similar support level, and as well as the lower limit of this medium-term descending minor ascending channel that I drew from the low of 11th of February from here. Only an hourly close above an hourly breakout above 1.2980 tighten short-term pivotal resistance for today on the sterling dollar will negate today's bearish bias to see a squeeze up towards 1.3025 slash 1.3040. Above 1.3040 may see the return of the impulsive up move to target 1.31 figure level next, i.e. I repeat in a nutshell. So for today, we will use a tighten short-term pivotal resistance at 1.2980 to maintain the intraday bearish bias on the sterling dollar. Next up will be the Asia Pacific currency against the dollar pair, starting with the Aussie dollar. So the Aussie dollar right now is actually have really broken down below the 20-day moving average, retested it on last Friday during the start of the US session as well, shaped a lower high, plunges, hit our first support level before trading back up in today's Asia session, and now is attempting to have a bearish reaction near the 50-day moving average. So with that, we will have a tighten key short-term pivotal resistance with the minor swing high that come in on Friday Asia session high, also correspond to the 20-day moving average, acting as a similar resistance at 63.05. So using a tighten key short-term pivotal resistance on the Aussie dollar, 63.05, maintain the intraday bearish bias. First support level to watch 62.60, a breakdown below it exposes 62.40 next for today. However, a push up with hourly close above 63.05 may see a choppy upward drift up to expose the next intermediate resistance level at 63.25 and 63.45 over here. All right, so that also confluence with the Fibo retracement level over here of 61.8% Fibo retracement. All right, so next up will be the dollar yen. So to repeat that, we will now maintain a intraday bearish bias, continue to maintain intraday bearish bias on the Aussie dollar with a tightened short-term pivotal resistance at 63.05. Okay, lastly will be the dollar yen. So the dollar yen continue to squeeze up in today's Asia session because of that rather lackluster preliminary services PMI that actually show it in deep contraction, in contraction mode, that causes the risk of BOJ to actually kind of hold back its normalization interest rate hike plans in Japan. So, but however, where it drift up towards the upper limit of this medium term ascending descending channel, which is from the high of 10th of January. That means, i.e., the descending channel resistance level, and as well as the hourly RSI now is coming close to the overbought level as well. So with that, we will flip to a neutrality stance for today at 150 figure slash 150. 150 figure 150.50. Lower limit will be last Tuesday swing low area that got supported since the previous Monday of 17th of March at 148.20. So likely it may start to trade within a sideways range for today between the neutrality zone of 150.50 slash 50 and the lower limit at 148.20. However, a burst up above 150.50, that means an hourly close above 150.50, may see the start of another extension of the corrective rebound phase, targeting 151.30 next, followed by 152.40 next on the dollar yen. Okay, so i.e., due to the RSI coming to the overbought level, price action coming near the near the medium term descending channel, and the previous candlestick so far has started to shape a small little body candle, all right, in the last 2 hours as we are speaking, representing a bit of indecisiveness by the bulls at this juncture. So with that mixed element, we will flip to a neutrality stance for now on the dollar yen between 150.50, as the lower limit is 148.20. Right, so now next up will be the major stock indices intraday technical outlook, starting with the Hong Kong 33 representing the Hang Seng Index. Still recall that on the Hong Kong 33 we flipped to a neutrality stance on last Friday because of the bearish elements that has been detected on the higher time frame chart, which is the daily chart at the 25.080 resistance level. So previously, the very steep multi-week up move from the low of January all the way up to 20th of March hit the upper limit of this medium term ascending channel that I drew from medium term major ascending channel that I drew from the low of January 2024. It hit this level. So right now there could be a chance of another round of multi-day to multi-week corrective decline sequence to shape a mean reversion decline to retrace some portion of this steep gain that was seen on the low of 13th of January 2025 all the way up to the high of 19th of March. And with that also being seen by the bearish divergence that's being depicted on the daily RSI, on the daily RSI, that still show room of potential to back down towards the lower 50 level, right over here. So with that, on Friday, we were not confident to actually maintain that bullish stance. We turned into a neutrality stance, and right now it has really broken below the 20-day moving average. Retested it in today's early Asia session. I mean, at the start of the cash Hong Kong stock market session, unable to break it for 2 consecutive hours at 9 a.m. and at the 10 a.m. mark itself. So with that, this seems to us that there's some sluggishness on the Hong Kong 33 on the intraday basis, and we'll flip to a intraday bearish stance for today, or intraday bearish bias, using 23,960 as my short-term pivotal resistance, which is so the pullback line of this former minor ascending trend line from the low of 4th of March. So as long as today price action didn't surpass above 23,960, we will have an intraday bearish bias stance on the Hong Kong 33. 23,960 short-term pivotal resistance. Near-term support level to watch will be 23,250 slash 22,980. Okay, this support zone over here. However, if we start to see a pierce up above 23,960 for hourly close above it, today's intraday bearish bias will be invalidated to see a recovery, at least in first step, towards the next resistance level or zone at 24,180 slash 24,350. So that's for the Hong Kong 33, flipping to a intraday bearish bias stance using 23,960 as my short-term pivotal resistance level. Next up will be the Japan 225. So Japan 225 continues to be trapped in this kind of rather complex minor sideways range. Retested the 20-day moving average on last Friday US session, but managed to come break below it and now shape a bounce. But today's bounce also seems to be facing headwinds above last Friday Asia session high at 37,980. Right, so with that, we will flip to a neutrality stance for today, 37,980, and the lower limit will be 37,380. That was last Friday US session low. So flipping to a neutrality stance on the Japan 225 between 37,980, upper limit, lower limit 37,380. Next up will be the German 30, representing the German DAX. So the German 30 and the German DAX managed to survive at the 20-day rising 20-day moving average, came down, did a push up on last Friday, and as well as the hourly RSI, it starts to have a bullish divergence as well at its oversold region. So with this positive element that has taken shape on last Friday, we will maintain the intraday bullish bias on the German 30 with an adjusted pivotal support level for today to watch will be at 22,740, which was last Friday minor swing low that managed to shape a bounce. Near-term resistance for today, 23,180, followed by 23,360 next. Only a push down and an hourly close below 22,740 will invalidate today's intraday bullish bias to kickstart a minor corrective decline sequence to expose the next near-term support level at 22,440. A breakdown below it may see a further extension towards the 50-day moving average, confluencing with the next graphical support as well at 22,240/120, i.e. Using a adjusted short-term pivotal support for today at 22,740 to have a bullish bias on the German 30, supported by this bullish divergence that's being seen on the hourly RSI, where the price action retested the 20-day moving average before shaping a bounce off it in last Friday US session. Okay, so that's for the German 30. Next up will be the major US stock indices, starting with the US Wall Street 30, representing the Dow Jones Industrial Average. So the Dow Jones Industrial Average today, last Friday, it came down, hit the neutrality zone, lower neutrality zone. But last Friday, we do have a neutrality stance, hit the lower neutrality limit at 41,450 before bouncing up. Today's Asia session gap up because of that Trump's flexibility announcement due to the upcoming 2nd of April reciprocal tariffs. Right, so with that, still within this neutrality zone, I will maintain a neutrality stance for now. I don't want to change much of it due to the, and also coming close to that 20-day moving average, I think as a resistance as well, which is at 42,490. So neutral between 42,250/490. Lower limit will be last Friday minus swing low, where it managed to shape a bounce, 41,450. Only an hourly close above 42,490 will see the extension of this main reversion corrective rebound sequence extending upwards towards the next resistance level at 42,980/43,120. All right, so maintain that neutrality stance for now for the US Wall Street 30 at 42,250/490. Upper limit, lower limit will be at 41,450 for sure, where price action managed to survive on last Friday. Lastly will be the Nasdaq 100. So for the Nasdaq 100, it managed to gap up above the upper neutrality range that we are having previously at 19,940 over here. So with that, I will use a very tight short-term pivotal support level for today, which is today's Asia session gap up at 19,770. So as long as during the European session, it covered this gap but didn't surpass below 19,770 short-term pivotal support, we will have a bullish bias for this residual push-up for this ongoing corrective rebound sequence towards the next intermediate resistance level at 20,130, which is so the 20-day moving average, I think as a resistance level as well, and the upper limit of this ascending range configuration. that I drew from the low of 14th of March. Above 20,130 may see the extension of this residual minor corrective rebound to retest 20,340 next, which also correspond to the 200-day moving average, I think as a similar resistance level as well. However, if we start to see a price action breakdown below 19,770, short-term pivotal support for today, that will invalidate today's intraday bullish bias for the residual mean reversion rebound scenario, and may start to see the best taking a rather foothold on the Nasdaq 100 to revisit last Friday minor swing low area at 19,430 in the first step. A breakdown below it increase the odds of the start of an impulsive downward sequence towards the next support level at 19,120, which is the minor swing low of 11th of April and 14th of March. So that's for the Nasdaq 100, having a rather tight short-term pivotal support for today, which is the gap support level that is being formed today's Asia session at 19,770 to have a bullish bias. But this bullish bias, to me, it doesn't seem to be the start of a impulsive up move, but rather a residual mean reversion rebound sequence that may be still intact to retest the 20-day moving average, I think, as a resistance in first step at 20,130 next. Right, so that's for the major US stock indices intraday technical outlook. Now move on will be the commodities market, starting with gold XAU/USD. So for gold XAU/USD, we do have a neutrality stance on last Friday due to the emergence of dollar strength coming into play. And on last Friday, it broke down below our lower limit, hit the next support at 3,000 before bouncing. And right now, it's attempting to shape a bearish reaction of this minor ascending channel support that I drew from the low of 11th of March, now turns into a pullback resistance level. And with that, I'll be using this pullback support, now turns into a pullback resistance as my short-term pivotal resistance for today, 3,380, to have a bearish stance on gold, as it may has now starts to kickstart a multi-day corrective decline to have a mean reversion decline to go back down towards the 20-day moving average, where previously it has a sharp push up above it. So first support level to watch for today will be 3,000. Below it may see 2,978 to come in next, using 3,380 as my short-term pivotal resistance. However, an hourly close and a breakout above 3,380 short-term resistance will see the intraday bearish bias invalidated and revive the bullish bias for the impulsive up move to gain traction to revisit the current all-time high at 3,058, followed by 3,076, 3,090 next. I.e., in a nutshell, because of the intraday technical elements has started to turn weak, gold XAU/USD right now is at risk of shaping a multi-day mean reversion decline in the first step. So today we'll be using 3,380 as my short-term pivotal resistance level to have a intraday bearish bias on gold. Lastly will be the West Texas crude oil. So West Texas crude oil on last Friday continued to trade sideways above the 20-day moving average after a retest at the first resistance level at 68.80, as it continues to actually shape this potential mean reversion rebound sequence as well. So with that, no change, still using 67.66 as my short-term pivotal support level, maintain this ongoing minor mean reversion rebound sequence on West Texas crude oil above 68.80. May see the next intermediate resistance coming in at 69.50. Only an hourly close and a breakdown below 67.66 will invalidate today's intraday bullish bias to kickstart a choppy downward drift to revisit 66.45. A breakdown below it may re-expose 65.70/40, which is the major range support level that is in place for West Texas crude oil since March 2023 over here, 65.40. Right, so that's for West Texas crude oil, still using 67.66 short-term pivotal support to maintain that intraday mean reversion rebound sequence. All right, so that sum up the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the data to look out for? So I mentioned today will be a global PMI preliminary release day across the globe. So over at the European session, we do see France, Germany. For France will be at 4:15 p.m. for the manufacturing PMI and the services PMI to be released. Germany will be at 4:30 p.m. And at 5 p.m. will be the aggregate Eurozone manufacturing PMI and services PMI. So market will be closing a close watch on their manufacturing PMI data because previously it was at 47.6. Market is now expecting a slight improvement to 48, but still below the 50 level mark, representing contractionary activity for manufacturing activities in the Eurozone. Then next up, we will have services PMI and manufacturing PMI up next in UK at 5:30 p.m. Singapore time. And for the US one, it will be up at 9:45 p.m. Singapore time. So market participants will be paying a close eye watch on the services PMI because we know that US itself close to 3/4 of GDP growth is being contributed from the services industry. So for the services PMI in US in the last few months has been slowly dipping downwards due to not so rosy outlook on the US economy due to Trump's erratic and aggressive trade tariffs policy. So market will be watching out the headline number on the services PMI. How does it fare? Markets expect the consensus is looking at almost unchanged at 51.2 from the previous month of 51 in February. Right, so that also we do have a slew of Federal Reserve officials speaking thereafter. So Fed Bostic will be speaking at 1:45 a.m. Singapore time. Fed Bar will be speaking at 3:10 a.m. Singapore time, and Bank of England Governor Bentley, he will be speaking at 2 a.m. Singapore time thereafter. And early Asia session tomorrow at 7:50 a.m. there will be the release of the prior BOJ monetary policy meeting that has taken shape last Thursday. So market participants will be having a close watch on the discussion among Bank of Japan officials to actually have a better view on what are their thinking going forward in shaping Bank of Japan monetary policy. So that will be out at 7:50 a.m. Singapore time. So with that, that sum up today's daily dose of market insights. I'm Kelvin here signing off, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.